Hello, my name is Steve Bigelow with the Candlestick Forum. Got a couple recommendations in these market conditions. And I say these market conditions, right now we can still see that as long as these markets trade below the T-line, we're still in a downtrend. That helps keep your anxiety factor out of your trading. But if you were short, today you can see the Dow was up 300 points at one time, but then finally closed down a couple hundred points. No, actually closed down 300 points. But that would have made you awfully nervous if you didn't have the T-line rule, that as long as you were below the T-line, you stayed short. And at this point, a lot of people in our chat room were saying, should we cover our shorts? The answer was, wait to the end of the day, see what investor sentiment does. Same scenario over here on the NASDAQ. It's been in a consistent downtrend. And you stay short as long as it stays below the T-line. However, no matter what direction the market's going, people are always looking for bullish trades. You might want to take a look at BWV, buy on anything above 640, a positive trade. There's your fry pan bottom. And you have a very simple trading strategy. You buy on positive trading and you don't let it close back below the T-line. The reason this is an attractive trade is at $6.40, the first target could be all the way up here to the 50-day moving average. And then it could even go higher than that because this came from a much higher level. So this is a high probability trade. Simple entry strategy. You buy it on positive trading and you don't let it close below the T-line. But in these market conditions, we're looking for bearish trades. So you want to look for something like this, where it's rolling over. You can see how there's a kind of a dumpling top forming, and when it broke this level, started a strong downtrend on bros. Or on OPTM, same scenario. When it broke this level, and notice how it did it with kind of a little trend kicker signal, had a big down day today. So we're recommending that you could go short on Sava, because look at your dumpling top, failing at the T-line, broke this level. So you could be shorting this one on weakness, expecting wave 3 to the downside, and then you don't let it close back up above the T-line, which will probably be down in this range tomorrow. So this makes for a very easy trade entry. Want to see it open lower. You definitely don't want to see the market indexes opening up 200 points. You want to see that the downtrend remains in progress. When you add up that together, more than likely you're in wave 3. So we can get into strong bearish trades in a downtrend. We recommended Etsy because of this kicker signal. Notice your trend was already in progress. There was some buying, but when they did a bearish kicker signal, we recommended shorting it because that meant there was going to be more downside. So with that, that's kind of a segue into, you might want to join us this Saturday at 10 o'clock. We're going to be doing a mini spotlight training on using the 3 variations of kicker signals. The kicker signal itself has a reversal, the trend kicker signal, and the flutter kicker signal. When you gain the insights of what occurs in investor sentiment causing those signals, you've got a very strong advantage as far as identifying not only the direction of a trade, but very strong direction of a trade. So with that, we'll see you in the chat rooms.